Welcome back to another episode of Fund Friday with a friend and a partner, the man, the myth, the legend, with Boost My Capital Group, Chris Price. How are you today?
Craig, I'm doing great, brother. Thank you very much for having me here. I appreciate you giving me the opportunity to share your platform.
Yeah, without a doubt. Well, let's get right into it. The world needs to know more about you on this platform. So tell us about yourself, kind of your background, and how you got into the chair you're in today.
Yeah, I have a story that may be a little bit unique, maybe not. But let me have at it here. So, what I oftentimes introduce people is I explain to them that my name is Chris Price. I'm a pharmaceutical executive by day, but a real estate investor by night. And my journey getting here has actually been one that has been, in my view, really interesting. And it started out like many people do, coming along the lines of traditional investing in 401ks, IRAs, the stock market, looking at being able to protect my wealth and grow my wealth from my family with the W 2 job and all of the things that come with it. And along that journey, what and when I say we, my wife and I, we learned that there was a lot of volatility in the marketplace as it relates to investing in the 401ks and investing in the stock market and seeing our hard work and our earnings go up and down like a roller coaster was something that was not really pleasant for us to stomach. And so we were looking at ways that how could we diversify and get out of that and maybe explore other ways that we can build and grow our wealth. And we started this journey in, formally in about 2012 when a single family home that we had, or excuse me, a condo that we had, we wanted to go ahead and move up, and because we were starting our family. And in that process of moving up, we turned that single family condo into a rental unit. And we realized that that single family condo was something that we were able to rent out pretty easily and make a little cash flow along the way. And we thought to ourselves, what if we were able to do something with this a little bit more structured and get some more strategy around this? And along that time, I started exploring different things, over the years, maybe, picking up different articles, for example, or I started picking up different podcasts and listening to audiobooks. And in that journey, I started to get exposed to this content. I would say fast forward to about 2017, 2018, started getting becoming aware of this idea of investing in real estate. And, this was something that was, I would say, a little bit foreign to us because we were like, should we pursue this, or should we really just continue to work at our jobs and do the things that we know that are tried and true? And in that time, I discovered a podcast. The podcast was actually a guy named Keith Weinhold, and it was Get Rich Education, and he's talking about single family investing. So I had come together and put together a complete plan for my wife and I around how many single family homes it would need for us to be able to reach our goal of financial freedom. And when we looked at that, we thought to ourselves, hey, that's going to be a whole lot of single family homes in order to replace our earned income. There has to be a better way and a faster way. Well, also in that journey, Craig, we got to a point where I was listening also to podcasts at the same time that were people talking a lot about multifamily investing. And one of the speakers at the time was a guy by the name of Brad Sumrock in our space here in multifamily. He said, you don't have to graduate from single family to multifamily. You can actually go straight into multifamily. And this was something that was really interesting to me. And, I noodled on that for so long. And I went back to my wife. I said, hey, I think we can go into multifamily. Let's shift strategies. So lo and behold, we ended up shifting strategies in early 2020, where we started to get into multifamily investing as passive investors. And then the journey goes on from there. And I'm sure we'll cover off a number of topics from there.
That's so cool. So I love it. Got into investing. You started single family like so many people, and that really lands well with me because, as many people who listen to the show know, I used to be a realtor. And I also thought that the single family route was going to be my path. And it's not that it's not going to be a piece of the pie, because I do think there's a lot of money to be made in homes. There's so many opportunities to be done out there on the single family home purchasing side. It's not the most efficient market at times, but it's not probably the quickest and most premier way to get there. And I think that's really through the multifamily and the commercial real estate route, right? So it's super cool that you had that, kind of learn there. And then I think another thing, just to dissect your initial comments, was, doing the normal tried and true thing. You would end up being successful at whatever you want to do, but what we're all trying to do is get there quicker and shrink that gap. And the traditional route is great because it's traditional and it will take you there. But there's also, dare I say, a more simple, or not simplistic way, but another way to do it, which is, real estate investing, doing stuff that maybe a little bit against the grain, getting into syndications, getting into capital raising, educating yourself. And the beautiful thing about yourself and what we do, we're in all these different groups, all these different masterminds, these networks. It's really just a beautiful group self-help education, leveling up experience that we all get to share organically together. We've had the pleasure of going to masterminds together. We've had the pleasure of, sharing happy hours and going to dinner and stuff and breaking bread and really getting to know one another. And all that information and ideas sharing is such a valuable piece to the puzzle. And it just gets me excited about getting connected with people like yourselves, but also just learning more. And the journey really goes from there. So I don't know if you have anything to add on that as well,
So
but
much to
it's
add.
so
No, I
lucky.
really appreciate it. It's the these you made so many great points, and the journey really has been fascinating. What I noticed, Craig, throughout that journey that I went on of learning about the ideas of financial freedom and financial independence, and all the ideas of passive income as an investor, or excuse, before even becoming an investor, what I realized is that as a W-2 employee, and I read that famous book, like everyone has, Rich Dad, Poor Dad, and all of those things. It was the gateway, right? That opens everyone up. And then from there, you go into all of these other books around, paradigm shifting books that start to change your perspective and open you up to things that you thought you knew, but you didn't know until you started to crack open these things and learn different perspectives. And I would tell you that in that journey of all of reading all of the books, listening to all of the podcasts, watching all of the YouTube videos and consuming information, there was a very pivotal moment. In addition, I should add that in addition to looking at real estate investing, my wife and I were also at the time looking at the idea of potentially buying into franchises. We were, in fact, in our careers, we were doing really well, but there's two key things that were going on there from a career perspective. Many people know that there are, you don't have as complete control over your career as you think you do. Yes, you can bust it and you can work hard and you can trade more time and spend all your nights and weekends for a 3% annual increase and a little bonus here and there, and you're kind of capped out. And if you're doing a really great job, you can get a 5% pay increase and a little bit more bonus. And some again, a lot of people, there's nothing wrong with that. Many people have that perspective, and that's their MO around how they can advance, and that has created a lot of success for myself and my family. But I would tell you that it's not necessarily the path to wealth building. And because that idea and that exchange of just constantly trading your time for money was something that for me, it was something that I I wanted more for my family. In this one life that I have to live, I wanted to make sure that I can focus on maximizing my potential. And in this space of learning about financial and growing my financial intelligence, learning about real estate investing, I also increase my growth mindset, my wealth mindset, if you will, to be able to really start to expand. And I came along this journey. We were looking at franchises and looking at real estate, and thought to ourselves, you know what, real estate is going to be the path that we should follow. And the reason why is because this real estate historically, if I take one brief step back, the way that people really build their wealth in this nation is either through business, entrepreneurship, or through real estate investing. And so when we thought about it, we really believed that real estate, that roof over someone's head being an essential need, is something that we were really passionate about investing in. And there was a pivotal moment. My wife said to me, "Okay, Chris, you're listening to a whole lot of videos and watching a whole lot of videos and listening to a whole lot of podcasts. When are you going to take action?" So we left off, and I was telling you a little, that hit hard, right? It
Yeah,
was
she
it was
she
one of
she
those.
basically called you out politely, saying,
She,
"Hey, you're
yeah,
here. Let's take the action, right? Let's take the plunge."
exactly. So we got to that point, and I was like, you know what, you're right. Um, and that brings us back to where we left off in that journey in 2020. Now, 2020, obviously, there was a lot happening, but I had invested significantly in learning about this space and learning about what we can do. And I had started to build relationships. Prior to that, I was attending a lots of in-person meetups, and I was attending some conferences and really starting to expose myself to this space of passive real estate investing as a as a passive investor, as someone who wanted to just continue to work, but I wanted to diversify my portfolio out of the financial markets into real estate. And in that time, that's when I start in between 2020 and 2021 is when I got into our first passive investments as real estate investors, which was just a great experience. It allowed us to learn the process. It allowed us to understand the right questions to ask. It allowed us to get exposed to the type of deals, the market research that go into all of those things. How what are some of the things that savvy investors or more savvy investors are asking in terms of the how they are assessing these deals. And in that time, what was really fascinating and what dawned on me was that I really enjoyed real estate investing more than just being a passive investor. This was something that I was like, this is something that's really hitting hard for me, and I need to get into this a little bit more than just being a passive investor into deals. And that's where there was a pivot into from going from a passive investor in multiple deals from 2021 to 2022 to then saying, hey, let me now take my knowledge and my expertise and start to share that with other and get into leading investments in my own firm. And that's where Red Fox Multifamily began in the beginning of 2022. And I'll go and we'll follow up from there.
Yeah, exactly. Well, and that's super fun because you're someone who is smart, and then you get the thirst and then the obsession, like myself, and you just have to share it. And it becomes so infectious. So was that kind of the natural route that, hey, you loved it and you couldn't just keep this to yourself, but you had to share it with your friends, your community, your family, so on and so forth?
That's exactly right. I started to get that bug of this is something that I'm so passionate about. And as I was learning it, I needed to talk more about it. Wherever I was going, I was talking about it, whether it was on calls with colleagues or whether it was with my friends and family, helping them understand this space, helping them learn the market, how to look at deals, some of the things. And you might have this experience as well. It was what was interesting about it is there's a few buddies of mine from college. We still have a group chat, and every once in a while there would be someone pitching some type of deal in this group chat. And what was interesting about it, there was no real knowledge that went into the deals that were going in there, real estate deals that were going in there. Hey, take a look at this or that, and it has all these great things. And now when I had the chance to actually learn this, it then gave me the opportunity to go back to those guys and say, hey, remember a couple years ago we were talking about this deal and that deal. You can actually do this. We can pool our money together and start investing in properties and started really to build our real estate portfolio. And this was something that was really exciting for me. Got a lot of intrigue from my friends, from my family, and of course from my colleagues working in my pharmaceutical career. That gave me an opportunity to get some exposure to them and really and as I was doing that, it gave me a platform to start to educate and to start to help people understand that there are more ways ways to build and protect your wealth than just investing in the financial markets. You can do so with real estate. And at that point in time is when I started to come to the realization that I wanted to make sure that I can transition into becoming someone who can lead or co-lead investment opportunities.
Yeah, and that's what we were able to do together. But just to take it a step before we get into that, what the biggest thing is, you mentioned paradigm shifting and ideologically shifting a mindset from one side to the next. I think so few people actually realize, or less people realize than they should, that those beautiful buildings that you drive by, those beautiful apartment complexes, the nice office buildings, the car washes you see, the mixed use, the retail, investors own those, and that can be you. And what we try to do at Lone Star Capital, for those who don't know, is basically give someone who might be writing a $50 million check or a $50,000 check the same experience nonetheless, where we're really giving kind of Main Street the access that the Wall Street sharps and insiders get. And we're kind of, flattening that kind of situation where, I haven't invested in the REIT, you invest directly into the opportunity with people like yourself, with groups like yourselves, which is super exciting because I think time and time again, people don't think that's even a possibility. Maybe think about real estate investing and they go, oh, of course, well, I'll just buy a townhome or I'll buy a single family home, which is better than nothing, obviously. But there's such a wide world of opportunities for one to get into.
Such a great point. Real estate investing, as you mentioned, is such a diverse field. And this is something that I was one of those people that you just described that I didn't really understand how much went into it. That office building around the corner from your home, those skyscrapers that you're walking by, more often than not, there are investor dollars in those things. The townhouse community, all of those different things, the car wash, as you mentioned, this space is amazing. Self-storage facilities, there's so many different ways that people, that real, and so much diversity amongst real estate investing, that this was really eye-opening to me. And so, to your point, finding that opportunity from myself around how do I really break into this space, and how do that I then take these opportunities to a community, was something that I wanted to make sure that I invested in. But I wanted to do so in a way that I can truly have some experience. I wanted the experience, one, of having that passive investing experience of going through deals, and, as I mentioned before, doing that due diligence, creating my own checklist of how to underwrite deals, and how to evaluate and assess deals, so that I can know what I'm doing. How do I assess the sponsor and their track record and what they were doing? These are things that certainly, this has sharpened over the years. But early on, I had much simpler checklist, if you will, in terms of the things that I was looking for. And as you begin to get more experience in this space, you then start to improve your tools, improve your due diligence process, and really start to dial in on what types of assets are you looking for? What types of returns are you looking for? Who are the people ultimately that you want to be partnering with? These are all things that started to really crystallize for me after deal one, deal two, and three as a passive investor, that I really started to build some momentum and get to a space to feeling confident that, hey, I can transition from being a passive investor to being someone that can actually help lead some things. But how can I do that in a way that with some confidence? And I wanted to make sure that I can invest in my education in this. One of the things that's important to me from a professional standpoint is that, of course, I've invested tremendously in my formal education, all the degrees, all the certifications, and all those things. That's all great, and that's done me very well as a professional. However, translating that into the space of being able to move into leading investments, I wanted to make sure I invested in my self education as well. And that old quote by Jim Rohn that said, a formal education will make you a living, but a self education can make you a fortune. Those words ring in my head pretty much every day. And I invested tremendously in for my self education. As I mentioned, beyond the books and podcasts, I started to learn about different coaching programs that I can go into to learn about to help learn about how I can teach others about passive investing and getting into deals. And that led me to one of the coaching programs in with Michael Blanc and the Dealmaker Mastermind community, as you mentioned before, to really help me enhance my skill set and my knowledge and expertise in this space, so that when I was out there talking with investors, talking about these things, that I would have command over these things. It couldn't be just, yes, I have a little bit of experience with investing passively in deals. That was all good, and of course I can speak from practical experience there, but I wanted the opportunity to also have that mastery over all the ins and outs of this. And that's why I felt it was very important to invest in my education.
Yeah, and that's what you have to do in this space, because even anyone you get in the real estate business, there's not one clear path to do it. You really have to seek it out yourself. It takes time, it takes trial and error, and it takes really just extra effort. There's not really a how-to manual thing. There's not one clear answer to do it, which is good, but also creates the confusion there. So you went from raising capital by yourself. Let's transition into the new group now with Boost My Capital, and then kind of your affiliation with the Connected Capital Group, if you don't mind, and kind of tie that together, if you will, with the vetting process and kind of the expertise that you bring to your community investors and such.
Sure. So from Red Fox Multifamily, which I started with my wife, that was our first company. We went to a school called Marist College, which is in upstate New York, and the mascot is the Red Fox, and that's what we chose to name our company after. All of
Very
our
cool.
dear friends and came from there, and something that we could have that red thread, if you will. And fast forward through there, we were able to invest in a few deals, in one of which with you guys in the Houston portfolio deal, which is absolutely tremendous, which we will talk about, I'm sure, about that experience and the quality of the work that you all do. But with Red Fox Multifamily, one of the things that we realized throughout the course of our investing journey, as that sort of solopreneur, if you will, was the idea that we wanted to find a way to scale our business from just being Chris and the investor who is focusing on certain individuals in the pharmaceutical industry to raise capital from, to connect to great investment opportunities. But what I realized throughout this journey was that deals really need two things. You need the deal, of course, but the deals need money. And one of the things that I realized, that in my space, in this pharmaceutical industry, in the broader life sciences industry, there are a lot of people who have capital, and they, most of them, feel that the only places that capital can go is the financial markets. And why couldn't I be the opportunity, the beacon, if you will, to redirect appropriately some of that capital to great real estate investment opportunities? And so as I came to that realization in Red Fox Multifamily, and my mentor, Philippe Schuligan, at the time, he and I were talking about my desire to scale from the co-GP model, if you will, to a fund manager model, because that was something for me that was much more of a scalable operation. It was something that I could really get my arms around and drive forward. And in the course of our conversations over our mentorship relationship over a year and a half to 2 years, we started to, as we discussed this, I was expressing my interest in scaling my business. He also said to me, "Hey, Chris, my partner Jeff and I are we have started a fund, and we are actually interested in bringing on the right partner, and we would like to explore if you would be interested in partnering with us in our team on Boost Capital." And this was this was this was something that was really important for me to consider. And when we discussed this, I wanted to, of course, as anyone going into a partnership, you want to make sure that you're doing this with your eyes wide open. You want to make sure that you take the appropriate steps, you do the appropriate due diligence as you would when you're making any investment, especially into a partnership, which is almost like a marriage. And so we spent significant time doing due diligence on one another to make sure that this was the right fit, that our interests were aligned, that we were going to, we had the shared priorities, if you will. And after we decided that, after we've done that, complete that evaluation, we decided that it did make business sense for us to connect together and join forces. And so at the beginning of this year in 2024, Red Fox Multifamily became a part of Boost Capital Group. And so now Boost Capital Group is focused on partnering with the best operators in the business to invest in commercial multifamily investment opportunities throughout, and other private equity real estate investment opportunities throughout the United States in specific growth markets. We're looking at very focused markets from Texas to Arizona to the Carolinas, and making sure that we can help our investors boost and protect their capital. That's what we're focused on. And I can get into some more specifics about the types of assets that we're looking at in particular, what our buy box is, if you will, as we go on with the course of the conversation. But I wanted to kind of frame that for you and the audience.
Yeah, well, thank you so much for framing that. And I guess let's get right into it. What you guys are looking for. What is a yes? What is a no? Because right now is as weird a time as ever. We're recording here in middle of November. This thing might be released in the new year or December, admittedly. But I'd be very curious to know what is making sense right now. What gets you a yes? Because very few things can work right now. And even if a deal works right now or the last couple of weeks, with this treasury run up, it may not make sense today without, an alteration to the deal of sorts. So be curious to know kind of your outlook on that perspective.
Yeah, you're right. There are very few deals that pencil, and I think the beautiful thing about our model and the fund of funds model is that it gives us an opportunity to be connected with great operators like you guys and others that have a great amount of deal flow, that allow them to one, be that first phone call for great investment opportunities, and two, that frequency of continuing to evaluate deals that and assess them that may work, that the volume for you guys in particular and others is at a space where this is something that's real, and that deal flow continues to be a pipeline that flows into our neck of the woods. What I would say in terms of what is making sense for us and what we focus on in particular, we are looking at in particular, value add play is what our and core are what our core focus areas are, and the markets that I mentioned, and strong growth markets. So we're looking at typically 100 units and up. We're looking at those value add and core opportunities. We're looking at opportunities that we can find a pathway where we can increase that income of the property and reduce the expenses through some of the tried and true methods that have typically been at play here. Maybe there are rent bump plays, maybe there are improvements in operations that can be done over the course of the life cycle of the investment to be able to juice the returns for the investors and everyone that is in the deal. But we're looking at, in particular, we're looking at minimum IRRs of 15%. We're looking at cash on cash in this environment still, as rates are still a little high. We're looking at cash on cash return minimums of 5% and up. When we're looking at average annual return minimums of 18% and up, to be able to, and of course, lastly, we're looking to help investors double their money in that 3 to 5 year time frame, is the message that we want to, and that I consistently communicate with investors, to help them frame what this looks like compared to other investment opportunities, which are many out there that they're looking at. Maybe when we think about it from a real estate perspective and looking at the risk adjusted returns, those are the types of things that helping to position it for them, that this for me the as I got into this space, trying to challenge someone who is completely indoctrinated by the general media, if you will, and telling them that investing in the stock market is not the best move for them is not a win-win situation. Instead, the message of diversification outside of the financial markets to give you more stability and growth is the message that I prefer to lean into, so that people can understand that. And that's a much more digestible, much more tolerable message that people tend to be more receptive to, at least in the communities that I operate into. And of course, as they have that experience, a great experience, they begin to see what this type of asset class and those opportunities present to them.
Yeah, well, the cool thing about the multi, and it seems like your strategy is basically multifamily, along with your other, kind of gentlemen that you work with there. I think the big thing people want to think about, or how I like to think about it, is the biggest, problem child in the commercial real estate space is office. So we have to separate two things. There's luxury and necessity. Okay, luxury is going to an office, self storage, a car wash. Necessity, workforce housing, no matter what the market cycle is going through, no matter what happens to AI or not, no matter if work from home is here or not, and Zoom is kind of the future of the world, you're going to have a place to live. So was that kind of factored into your thought process there with you and your co-partners?
1,000%. I'm so glad that you actually mentioned the office part to this, because when I speak to investors, of course, when they hear the doom and gloom, and the media typically communicates, oh, will commercial real estate crash? Of course, yes, multifamily is not excluded. There are some issues in multifamily we're aware of, but when in general, when those messages are communicated, it's typically associated with office for all the reasons that you mentioned. No, you mentioned, and when when I have to reset investors and help them understand that, hey, we're talking about commercial real estate, and commercial real estate is a very diverse asset class. There is commercial office, there is retail, and so on and so on and so forth. And yes, there's multifamily, and I have to unpack that to be able to get them to a space to understand. When to answer your question about, can you repeat that question again, Craig? I
Yeah, it's
want to make sure.
basically, was that part of your thesis, basically the luxury versus necessity? So it sounds like
Yeah,
that was,
yeah,
a big part of the pie.
for sure. Yeah. So when it comes to, when as we think about things, we think about it from the perspective of, again, that essential need that people need, that roof over their head. And for better or for worse, when people have to make decisions over, am I going to pay my rent, or am I going to go fill my prescription? And yes, there are people I recognize daily that are making these types of decisions. We know that many people are going to choose to keep that roof over their head, rightly or wrongly, to be able to continue to thrive and survive. And so focusing on those fundamentals, and not focusing on areas where people are speculating, where people are just reaching for different types of investments because their cousin Tony told them that this was a great investment opportunity. That's not the space that we play in. We focus on we're very focused on practical investment opportunities where there is a core need to be able to serve that need. And when we think about the economics and all of the things that are going on in the broader market space, where throughout the course of the past few years, where you've had a shrinking supply of residential housing, and affordable housing in particular, when you think about the interest rate increases, think what I communicate to my investors in a very practical way, and I start to tell them, hey, during the pandemic, did you take advantage of refinancing your home mortgage by any chance? Many of them say, yeah, I did. I started at a 3.5, but then I refinanced to a 2 because it was there. if you exacerbate that, across the board, millions of Americans took advantage of this to be able to lower their interest rate because the government or the Fed was giving away free money. And so that shrunk the supply even more. And now when you're talking about a situation where you have limited supply of single family homes, you have, for that limited supply, you have a tremendous amount of competition for those people who can potentially afford those homes. In other cases, you've priced a lot of people out because of that limited supply, that and that high demand, the value of and the appreciation of those homes has gone up tremendously. Now we're in a situation where that would be home buyer that wants to be in that first home or that next home, it's becoming more and more difficult for them to reach. And so that positions multifamily in a really great spot from my point of view. And yes, in some of the markets that we're in, there is new supply that is coming online. But if you look past that into some of the out years, you'll see that the supply of what's coming online actually is drying up, and that presents again a great opportunity for multifamily investors and operators like you all to be in a very favorable position in those growth markets, in particular, to be able to supply a great need for not only the community, but also make a win-win-win for the investors as well.
Yeah, well, you really mentioned a lot of great points there. What is really sticking to me, which is such a fact, is the supply issue and the lack thereof to be there on the home side of things, because people have homes where they're not really going to get out of them. There's also so many institutional buyers now, or investors who took advantage, the wealthy, that were taking advantage of the low interest rate environment, and they're not going to sell those properties because they've got a sweet 30-year fixed rate debt on it. They're cash flowing. It makes no sense because the next property they would want to trade into, there's really no value there because their
That's right.
payment would be high. So they can cash flow. It can make sense. There's a lot of people right now that would historically be, okay, well, hey, I bought my house in, call it 2020. Well, I'm going to be thinking about selling it 5 years later, right? Most people are on that 5-year plan. They want to upgrade then. They can have the kind of the same lifestyle, historically speaking, sell their house, have a similar mortgage payment. Well, now where, locking a sub 3% mortgage payment, selling your place, and then, let's say acquiring a new spot in the next neighborhood, trading up the neighborhood. Well, when you trade up and, also swap your rate away from a 3% to a 6.5%, all of a sudden that payment is not realistic anymore. So that's a problem right now. What's happening is there's never been a larger spread of renting to mortgage payments, which is a strong tailwind for multifamily. Yes, there is supply coming online right now, but the reality is the affordability gap has never been larger. So that's one thing. And the next thing is the average home buyer now is 56 years old. That's not young.
No.
So, people are generally going to be renting for longer, which is all going to be positive for what we're doing in the multifamily space. And that's also one of the things that we like to do at Lone Star Capital, which is preserve affordability, provide some affordable housing for those who need it the most, quite frankly. And that was a partnership that we did together for the first time, which was the Houston 3 property portfolio.
That's right. And that for me, I had, when I came into this space, my first deal was a 152 unit Class B property in the Dallas Fort Worth MSA. And for me, I was like, wow, this is a big deal. And fast forward, got into, subsequently after that, I got into another 120 unit deal and some deals after that. And then had a great opportunity to connect with you. I have been following what you and your team at Lone Star have been doing for some time, and was looking for an opportunity to be able to connect and partner with you guys in some way. And lo and behold, you guys host a fantastic conference at your offices in New York City, in the financial district at the World Trade Center, which was, for someone like me, very powerful to be there. on those hallowed grounds, and but to see all of these great things going on and what you guys have built was really tremendous. And building, from there, and being exposed and having established those relationships there, and leading to an opportunity to participate as a fund manager in that Houston portfolio deal was just something that was a landmark opportunity for me. The quality of the work that you guys do, the professionalism that you do it with, makes it easier for fund managers like me, to be able to showcase to my investor base, who in the pharmaceutical and life sciences industry have, connect with the polish and the professionalism and the quality of what you guys do. And by affiliation and connectivity with you guys, being able to showcase that opportunity, open people's eyes to these types of investment opportunities. And that, to me, was one of the fantastic things amongst many about being able to partner on that particular opportunity. That was just tremendous. And I know that now, pivoting from Red Fox Multifamily to Boost Capital Group, we are now in working amongst many other fund managers, in a group called Connected Capital, which is a group of fund managers that is focused on, doing their best and due diligence that they can, and being able to look at deals and operators and turn over every stone, if you will, to be able to ensure that everything that can be done to evaluate an opportunity and an operator is done, so that when we do bring those investments and go to market with those opportunities to our investors collectively, we can do so with the highest degree of confidence. And I know that Connected Capital and Lone Star are evaluating, whether or not there are opportunities for partnership there in the future, for sure.
Yeah, no, we look forward to continuing the deal flow. Actually, as a matter of fact, for those listening, it already happened, but we're going to do a webinar tomorrow with them, and then a following webinar actually a couple weeks later, just to make sure that we're integrated with such awesome people and take advantage and educate, but take advantage of the platform there, and to kind of cross share there in that sense. So super happy that you're working with them, and we're super grateful for the partnership that we got to do there, and for you saying yes then. A couple things as we wrap up here. What gets you excited for the turning of the market cycle here? Because it's no secret that, things are changing. An election just happened. We're getting rate cuts now. Treasury market is volatility. There's a lot of, stuff to be kind of pessimistic about, but what are you optimistic about right now?
Boy, that's a big question. And I would say I'm most optimistic about the idea of rate cuts, of the rate cuts potentially happening, is one of the key things that I'm looking for. What opportunities does that create for new dollars to begin flowing to opportunities for those who were potentially waiting to sell? Does that position them in a more favorable opportunity to sell in some instances as well? That's something that I'm watching out for in terms of investment opportunities. And then, as I mentioned before, I'm very bullish on multifamily, for just the practical sense of the conversation that we were having just a few minutes ago. Multifamily just makes sense. That delta between, or that gap, excuse me, that between renting and owning a home, and all the expenses that come with it today, is just tremendous. And for many people, it makes a tremendous amount of sense for them to rent. And again, we're not here to debate the rights and wrongs about these things. But what I do know, as an investor, is that you want to be able to provide value. You want to be able to serve a need. And multifamily, for what we do, does exactly that. And we want to be well positioned for our investors to be able to help connect them to great investment opportunities like what Lone Star brings, to be able to help them diversify their portfolios and boost their capital.
Yeah, I love it. Chris, you've been such a great guest. Where can people find you if they want to learn more about you, your group, and kind of your overall philosophy?
Yes, well, people can find me at Chris at boostmycapital.com. Our website is mycapital.com. You can find me there. And for anyone that wants to connect, please send me an email. I'm looking forward to connecting with you there. And I'm also very much active on LinkedIn. You can find me at Christopher Price MBA, and I'm there for the dialogue. Reach out to me as well. And then finally, active on LinkedIn, excuse me, on Instagram at the real Chris Price.
Let's go. Chris, thank you so much for your time today. We'll put that in the show notes. We appreciate you. Thank you so much for your partnership, your knowledge, your attitude, your efforts, everything. You're the best. I appreciate you. For all those who've been listening, we appreciate you listening so far, being a part of this community, and we will see you next week. Peace.